Okay, everybody, thank you so much for attending. Sergio and I have been working this afternoon to get this presentation together for you, and we're excited to just kind of answer some questions for people who are maybe thinking and wondering about, what's going on with COVID. Just so you know, I'm not on a tropical island. Most of you have probably seen this by now. It's just a background I've got, but it looks a little bit better than what's really in the room. But anyway, so we're excited to do this webinar for you. We want to give you real good information that will help you make a decision whether you should move forward with trying to buy a home or not. Buying a home is a big decision, and it can be something that can be a little bit confusing and stressful. Our job is really to make that easy. We want to take the stress out of it and make it easy, help you make a decision that makes sense for you and for your family. So what we're going to do is go through some information about what is current with COVID, with the lockdown, with the housing in San Diego, and kind of the basics of what it looks like to start to look for a place. Sergio, you want to jump on video and say hello?
Yes, sir. Let's see. Uh, Go ahead and grant me the ability to.
There we go. I've got a button here, I think.
Okay.
Uh, all right, so we've run into our first technical glitch. I don't know how to
No
do this.
worries.
So what
Yeah,
I'm
you
going to
know
do
what?
is I'm going to go ahead and make you host.
No, no problem. And I can talk too. I mean, I don't have to be live.
Okay, so now
Uh,
you are host.
oh, I'm the host now. Oh man. Okay. Oh boy,
There
that
we
that
go.
that took
There.
care of that real quick. Okay.
So
All right.
there's
Awesome.
Sergio. Just so you guys know, I am a licensed real estate agent here in California. My name is Chris Pacilio. You can see my name on the screen. This is my friend Sergio Lujan, and he is a mortgage originator. He is a mortgage lender basically here in California. We are kind of working as a partnership, as a team, to give you the information from the real estate side and also from the mortgage side. So say hello real quick, Sergio.
Yes, sir. Hold on. Let me change this. Okay. Well, I'm happy to be here. Thank you, Chris. I'm glad that we were able to put this together quickly because this is the number one question that I get when I sit down with someone or I talk to someone on the phone is whether or not they should be looking or considering to buy a home right in the middle of a pandemic. So I'm glad that we're addressing this right now, and because it's a very, very, very real question.
Yeah, absolutely. And just to let you know a little bit about us, my background is I have been a landlord. I've had some homes that I've remodeled and sold and made some profit on those. And that's what actually brought me into the real estate industry to help others do the same thing. So I'll show you a little video later of a couple that I helped get into a home, and they are ready to basically start making money. They're making a lot of money off of the home that they bought each year that they own it.
Yeah.
Sergio, I could speak for, has many years, almost 2 decades of experience in
Amazing.
the mortgage industry, and he is a truthful
Fantastic.
lender. He is very thorough, and so that's why we chose to work together.
Sweet. Thank you,
So,
bud.
Sergio, if you want to jump on in
Sure.
and we
Want me
can
to do
get
my
started.
screen share? I'm ready if you want.
Yep.
Okay. Let me do this. Let me get this started here. And hopefully you could see my screen here. So this is our title for the night. This will be quick. I was telling Chris a little earlier that I'm really excited about this because I get my thoughts and everything that I normally share with a couple when I'm across, the office at a desk. All these things that I get to write down and explain and just I get to actually they came out from my head. Now they're sitting on a PowerPoint. And so this is awesome because now I've got pictures that go along with my words. So let me guide you here a little bit through this process. A little quick background. Uh, with when it comes to real estate, very few people ever do it right 100% of the time. So let me start off with a little story. My first home that I bought, we bought a condo when my wife and I were first married. This was back in 1991. All right. Soon to be, next year, it'll be soon to be 30 years ago. All right. We got married young. We were really young. And so that little condo at that time, we bought it at the peak of the market, the peak, absolute peak. It was 1991 in San Diego County. That little condo was worth, at that time, it sold for $85,000. Just hang with me here. That little condo just was worth let me see, by probably 5 years later, it was worth like 65. Yeah, roughly. Because we saw a decline 3 years later, excuse me, 3 years later, we have decline. Then we had a personal tragedy in our life. My wife got very ill, and then all of a sudden the roles were reversed, and we couldn't afford it anymore because I was going to school full time. So we wound up having to short sell, and eventually we tried to short sell, but then it actually foreclosed. That little condo, when you look at over time, from the time that we bought it, lost it, and then eventually over like a 20-year period, that little condo wound up being worth $320,000. Okay. Now that's important because it shows the benefit and the power of real estate. At that time, the average rent where we were living was around $600. Our monthly payment was about $900 that we were paying, about $950, which was a big jump. That was 50% more. But over time, that actually started to go down, because had we been able to keep it, we would have had an easy $750 monthly payment. And that condo today would have still been renting out for a very good positive cash flow. So that's my own personal story on like my first property I ever bought.
Yeah.
And I'm excited about sharing not just my successes, but my mistakes, because you can learn from people's mistakes. And I'm very transparent when I share with folks about why or if they should buy now or not, because that's a big question. So that's not in the slide, but that's free. So that goes along with, should I be buying in a home? Should I be buying today? Everyone always asks that question, regardless if the market's down, even, or going up. It's always a consideration. All right, so we're going to get into a little bit of this. It kind of gets a little boring here, but a little bit of reading. Chrissy, if you want to jump in at any point, please jump in. As things, if we were to go back and look at the beginning of this COVID shutdown, and we would the first 2 weeks of the 2 to 3 weeks, we were in panic mode in the mortgage industry. We were in panic mode because the market was just rattling because of this unprecedented stoppage of our economy. It just came to a grinding halt, and we'd never seen anything like this before. So this, one would have thought that if you went up from what was that rate, maybe around 4% unemployment rate then, 3.5%, 4%, and you went up to 15% or 16%, that would trigger a recession or a depression. That might have happened, but what happened otherwise is sellers started to take their properties off the market. And what we expected depreciation due to this economic slowdown went the opposite.
Yeah.
Again, whoever you want to jump in, please do. And so that's what this little chart in essence is starting to show us here. And prices appreciated substantially. Chris will get more into it as we move along. This little infographic kind of gives us a quick little synopsis of kind of where the market is. Rates, think about it. When I bought my little condo for $85,000, you know what the rate was? It was 8.50. 8.50. Look at where the kind of, it's not exact, but rates are less than 3%. They're less than 3%. That's unheard of.
Yeah.
Unheard of. Historically speaking, we've never been here before. Chris,
yeah, that's right. I actually went to fanniemae.com, and in the last 50 years, it's never been this low. So this is truly a historic time for these interest rates. And what that's doing is driving people into the market to buy, because basically they're buying at a cheaper rate. They're buying the loan is costing them a lot less per month.
A lot less per month. So it's amazing. It's absolutely amazing. Now we can get into some of these other numbers. Average home price has increased 15%. These numbers are kind of representatives of San Diego County right now.
Right.
So just to give you an idea, these are not national numbers, because real estate is always regional. It's regional.
Yeah.
Go ahead, Chris.
One thing I want to jump in on is this, that graphic that says that median home prices are going up. They are going up. What I wanted to point out for people is this: if the so the interest rate, if you were to see a 1% increase in the interest rate, interest rates really can't go down anymore. The next year or two may see interest rates increase. The government's probably going to try to keep them down because they want the economy to thrive. But 1%, let's say we jumped back to 4%. Let's say we're at 3, just for example, and we jumped to 4. That could actually represent like 20% increase in purchase price. So think about it this way: a $400,000 home, if you're paying 1% more in interest rate, it's now like a $480,000 home. And that's a lot. That's a big, big jump. So when we see a $400,000 home go up 20 grand, we're like, okay, yeah, it's more expensive than it was last week or last month or last year. But if we wait until that interest rate goes up, it's actually going to cost us more than the purchase price. That's the one thing I wanted to say about that.
Awesome. Thank you. No, that makes these numbers come alive, man, because these numbers are kind of boring when we just look at them on paper.
Yeah.
And I'm always tasked with the task of explaining these numbers to people and explaining the financing, and I got to make these numbers come alive. So I appreciate your input. Now this 24% down here, that's an interesting, that means, let's see, if you were to take percentage, well, 75% of the people in San Diego County cannot afford to buy a home. So let me reverse that around. 7 out of 10 people cannot afford to buy a home. And that is very, very discouraging as a whole, because San Diego County, as beautiful as a place it is, and it attracts a lot of people, it's creating its own internal problem where not everyone can buy a home. And we're having to I see creative maneuvers. I see families coming together. I see friends coming together and buying property in order to be able to stay in San Diego and be able to live, their remainder years here. So that is a concerning factor. Other parts of the state, like San Francisco, the Bay Area, those numbers are even lower. So it's really amazing what's happening there in that department. And that's California. And that's why some people are choosing to leave California, because they're choosing to move on to a lesser cost state. So just it's just reality right now. Equity in California historically has always pointed this way. It's always historically, yes, it's gone up and down, up and down, up and down, but it keeps going up and down, up and down. We are now at, what's the median price? 570, 575?
No, we're up to 620,000.
See, so mine is like 8 months old, my number.
Yeah.
So, and that was at the beginning of the year.
Yeah.
So that's, again, this is reality. This is sobering information. This will tell you, is it right for me to consider buying now? And we'll, by the time we're done, we hope to empower you, give you enough information so that you can kind of come to grips with it, as to say, well, it is the right time to look into it, or it's not.
Mm-hmm.
Keep going. Reasons why you might want to consider buying a home during COVID-19. Right at the top of the list, low interest rates. By the way, I'm not monitoring the chat on this one, but we do have Marcella who will be monitoring our chat. If you have any questions, please feel free to pop them in the chat box, because Marcella will be helping us out. So number one, we already covered it. I'm writing his rates. For example, I have a veteran who is getting a 2.25 rate, 2.25 rate on a 30-year rate. That's amazing. You thought 2.88 was low. try 2.25. That
Yeah.
is amazing. That's a 30-year rate. That's a veteran. We have different classes of loans. We have FHA for HUD and what would be under the HUD department. A VA is for our veterans who have served. And then we have conventional loans for, and they pretty much are handled by Fannie Mae and Freddie Mac. So a lot of language here, but the point is interest rates are super low. In today's environment, we are seeing a mass exodus. People are leaving, departing big cities, and I'm saying just like I have a nice couple that just moved out of Long Beach area, Paramount, I believe, and nice couple with their family. And they were there looking for a home, but everything that they were running into was in the $700,000 range. And they, not say that they're low income by any means, but they didn't want to be house poor. So they moved to an area now that's about 70 miles away from that location, because the gentleman works in Long Beach. And people are making these tough decisions, and they're leaving high cost areas because now you can work from home. Who would have thought that COVID would have unveiled and would prove to employers, because employers never trusted you, that you could work from home, because
Yeah.
they weren't too sure if you're going to be, riding your bike or, playing video games. They didn't have a choice with COVID. They had to trust you. So now we can work from home. I mean, I can't tell you how many industries are working from home. Federal government working from home, state government working from home. So it changed the playing field for working and telecommuting forever. So now we have home office, we have homeschool, right? Our kids are still home from, a lot of them haven't gone back.
Remote
So
school.
it's changed everything. Go ahead, Chris.
Yeah, remote school or virtual learning is
Virtual
happening,
learning,
and
absolutely.
like it or not, it's just a side effect of kind of where we're at. So
Yep.
yeah, home has become redefined for us. It's no longer kind of just the place we make food and sleep. It's we're there a lot more now.
Were there a lot more? Yeah, that's 100% correct. So all of this, all these little sections here that I'm pointing out to, lead to one thing in terms of long term. If you're renting, you're not building any equity. Well, you are. I lie. You're building your landlord's equity because you're making that landlord some money.
Mm-hmm.
And instead of you at least building your own equity, people will make an argument. Why should I get a mortgage? I'm going to get in debt. I'm going to get into $500,000 debt. They're right. It's a good point. Why should I get in for 30 years? You're right. Issue is 30 years go by. You haven't bought a home. You end up like my mother. My mother never bought a home. She was classified as under the working poor. She was under, that was her classification. When you looked at the amount of money that she earned in her history, she was a working poor. She never bought a home. In her older years, she had to go into senior housing. Not a pretty sight, folks. Not a pretty sight. Yeah, some of those places are nice, but some of them are not. It was very painful. So I'm just sharing with you that you want to build equity.
Yeah.
It doesn't matter if you're 40 or 50 years old or even 60 years old and you're considering buying your first home. People are living longer. And if you want to stay in California, you need to control that. You need to take control of that. Chris?
Yeah. So as we said on the last slide, equity build in San Diego is 3 to 6%. Sometimes it's even more. So if we just take a round number of, let's say, 3%, so you're making money, you're borrowing this amount of money. Let's start at the basic part. You have to pay rent and live somewhere. So you're paying your rent. Now instead you're paying a mortgage, okay? And you've bought a home that's worth maybe 10 times what you actually put out in your cash. Your cash is maybe you put 5% or 10% down, but you bought a home that's worth, 400,000 or 500,000. You're now making equity on the 500,000. 3% per year, if you do the math, is about 15,000. Okay, in 3 years, that's 45,000. I can't do the math, but I think it's 75,000 in 5 years. 5 years, $75,000. That's a lot of money. And all you did was buy a home, move into it, and pay the mortgage each year.
That's right.
So if you don't, even if you don't think, well, I'm going to live there forever, or I don't think I'll live there forever, if you live there just 5 years, you might be making that much money. Now, how does that relate to the cash that you put out? Well, if you put 10% out on a $500,000 purchase, that's $50,000. Now you're making 75 on top. You're making a lot of money. You're making more than what you put into it
That's right.
on the way back. Now there are fees when you go to sell. There's fees for escrow fees. There's agent commissions. So it does cost you. But imagine instead of renting, you buy, and in 5 years you sell, and you take money out of the house. It's very doable here in San Diego.
Chris, I'm going to walk you back. For those of you that are listening, watch this. The year is 2012. We're right in the middle of a recession. I meet with a nice young couple. He's in the U.S. Navy. I work with a lot. I'm connected to San Diego quite a bit. He's the U.S. Navy. They buy their first home. It's about 265, okay? And it's an area called Chula Vista, city of Chula Vista. They buy it for about 265. And it was a struggle. And they were saying, well, should we buy? Are the values going to continue to drop? So it's a different question. People now are asking, hey, are values going to drop next year in 2021? Is there a recession around the corner? There's all this doom and gloom. If we have one president versus the other president, what's going to happen? So you have all this, there's always uncertainty around real estate, by the way. But this year is 2012. At that time, they were concerned that if they bought, that their home would go down the next year and so forth. Some similarities. Would you know that 3 years later, that house had appreciated nearly $100,000? It was like 90 grand it had appreciated.
Yeah.
And they were ecstatic. They were able to cash out, pay off debt. And then eventually he wound up being transferred. But the point is that they paid $60,000 worth of school loan debt and combined other debts from that sale.
Yeah.
They used their BAH, their base housing allowance. That meant it was if you know anything about government and how it works, and when you're in the service, they give you this lump sum money, and you can go and use it in their housing, which is military housing, or you can go and use it outside where you can actually buy and build equity.
Yeah.
I'm telling you, it's the simplest way for the average person in America to build wealth.
Yeah. So we know that there are some economic issues happening in the country. There's no question about that. Why does housing continue to go up in value here in San Diego? What we see is that there is still a demand for people to live here. Now, their locale may change a little bit. Maybe they don't need to live as close to a school or work, but people still want to live in Southern California. So as long as there's demand, which historically has not waned, it hasn't gone down ever here in San Diego. The prices will continue to go up.
That's right. Chris, I'm going to go to the next. Actually,
Yep.
We have a question that came through. I'll save it till later. I'll save it for later. Okay. So here's another. I already gave you a verbal case study, but here's one in writing. I meet with a nice family, and they were, at that time, they were living in an area called in Temecula. You know where Temecula's at? We just went from Chula Vista to Temecula. It's like 75 miles apart. And I cover a big area. So nice family. They were renting for $2,400. You can see my screen, by the way. Everyone can see my screen? Okay. $2,400, which is a pretty decent kind of average rent now for a 4 or 5 bedroom home. Okay. Rents are anywhere from $2,200 to $3,000, somewhere in there, depending on where you live. So here they are paying $2,400. We were able to get them qualified for $390. Okay, $390,000, just a little shy of $400. At that time, 2 years ago, the rate on a first-time home buyer program was 5.5. 5.5. And look what I had to share with them. I said, well, you can continue to rent, pay $2,400, or I can give you this loan and your payment's going to go up $461 per month. That's a big pill to swallow, right? That's almost $500 more per month. But guess what? They saw the value because they knew that 2,400 times 12, which was over almost 28,000, was going towards someone else's equity. And they, after chewing on it and doing their math, and they came to the conclusion, let's do this. They bought their first home. They bought it with that payment. A year later, about a year, a full year later, we were able to reduce their rate to 4.25. Oh, our payment doesn't reflect there, but their payment wound up being, at that time, it had dropped $300. Now, the next, oops, I just jumped. By this year, so now year two, by year two, we were able to lower their rate to 2.75. That is about, not quite half, but it's a big number. And we were able to pay off their two loans. The DPA stands for down payment assistance. The two programs, the loans that we gave them the down payment and gave them their closing costs. That was about $27,000 combined. Now they're paying that money off, and they're sitting on a payment that is right at $2,441. I can see that. So think about it. In 2 years, their payment now is virtually where it was then, just about 2 years later.
It's the same as what they were paying for rent.
And now they own it. They're paying off the down payment loan and the closing cost loan. They're paying that off, and they're on their way. If they listen to everything that I share with them, they'll pay this house off in 20 to 25 years.
Can I jump in? So if these folks are making 3% equity, oh, you're not going to be able to see my thing because of my virtual background. 3% equity on that purchase price per year is about $11,700. So rounded up to about $12,000 a year. If we keep going the way we're going, 390,000, 5% equity is almost 20 grand a year. So they sit on this house for a few years, they could be making somewhere between 12 and 20 grand in equity each year. And then when they cash out, they will have that money to do something else with.
That's right. That is correct. And just give you a little extra, I'm going to add more validity to what you're saying. Their home hasn't been appraised. We didn't have to, let's see, in that case was appraised at, we don't have it there in writing, but it was appraised right around 435. 435.
So they're already up 45,000.
So come on.
Yeah.
Right? Come on now.
That's how it works.
That's, I mean, I'm telling you, but the key to all of this was they were willing to take that plunge at 5.5 with $461 more per month. That was almost $500.
Yeah.
That was their risk.
Yeah.
But look how they were rewarded.
Yeah. And I think this is the power of what you do, Sergio, in that you're able to refinance these numbers and lower rates when they go down. Now, right now, you can't get much lower, but maybe someday you can. I don't know.
Right.
But they're going to be very happy if they stay at that 275 rate for quite a while.
That's right. It's amazing. So but those are two real life case studies with no names attached, but two real families that have been helped and blessed by getting involved and buying their own home.
Yeah. So the next story we've got is a couple that I helped, Patrick and Abby. They're both engineers. They're software engineers. So for them, their company told them to start working at home. And so they said, well, we don't want to really be in our apartment anymore, and we can afford a home. They love the Spring Valley area, so we were able to find them a home in Spring Valley. It needed a little bit of work, but they were willing to redo the floors. They changed the floors themselves. They did a little bit of improvement on it, and now they've got a really great place, standalone house that they are building equity on each year. So we can run that
Nice.
video real quick.
Go for it.
You're going to have to click
Oh,
the
I do.
button.
Oh, I'm sorry. I forgot I had control. I'm running it. Let's see here. Click. Okay, it's coming up. And let me make sure it's being shared.
It's not working.
No. Oh, okay. Let me hold on. Let me make sure I'm sharing. Okay, I see it buffering. Do you see it buffering?
Yep.
Okay.
It's not working.
Oh, it's not. Oh, okay. Okay.
Well, anyway, that's Patrick and Abby.
Okay.
Patrick actually had a lot of questions for me about owning a home and what how to build equity in a home and how to invest in homes. The home they wound up buying was a 3-bedroom, 2-bathroom with a backyard with a pool, and so they've already built in equity by making improvements on the home. So that's one of the folks that we got to help out.
Nice.
So Sergio, if you're able to jump to the next slide,
Sounds good. Let me
we
get
can
out of here
we can
and
move on.
sounds good.
I met Patrick and Abby through an open house. They walked in the door. They had been running around the town looking at all these different homes on their own. And I said, hey, I've got some other places I could show you if you don't like the place, here. And we wound up looking around, and they knew what they wanted, and they wound up finding exactly what they wanted. So, yeah.
Right on. Awesome. I will, Chris, I want to make sure you can see the screen.
Yep.
Okay, cool. So this is a big question. There's three main factors that that we need to consider when we're looking to buy a home. So number one is what now we're judged by our FICO score. When I came in the business, I came in at the time when FICO scores were really ramping up. It was in 2001. They had been out, I think, maybe a handful of years. So we did something back then that was called a lot of manual underwriting. And so we would look at your file and we would look at your credit history and we would make decisions based on how many lates you'd had. But then now there was this algorithm, this computer model that spit out a number. And so now we're really geared by these numerical values that we use to assess if you can buy or not. And these numbers start at 620 at the lowest part of the rainbow here, so to speak. So your FICO score can be as high as 800, but we won't lend any more than your traditional agency at 620. That means that you need to have at least three trade lines. What are trade lines? Trade lines are like a credit card, a line of credit, a car loan, or a school loan. Those are trade lines, 3 active trade lines. And to keep it simple, we're looking for you not to have a foreclosure, collection, an auto repo, lates on your credit. We're working not to have that. Can we lend if you have one? Yes, we can. If you have a foreclosure, we can lend. You have to have a waiting period of at least 4 years. You have collections, as long as they're less than 5,000, we can work with them. Even if you have an auto repo, can we do it? Yes, I've done it before, but there's work that you've got to put into it. And sometimes there's even time that you have to let to elapse before you can actually buy. Sometimes you have to wait. Sometimes you do have to wait, and you have to wait a year or two. But these are the very basics on credit.
I'm a little fuzzy on trade lines. What is a trade line? Is it positive or negative?
So a trade line is for example, let's say, oh, here's an example. I've got a 22-year-old son. He has no credit right now. No credit. He has no FICO score, no score at all. That person, technically, we cannot lend to unless we have to get creative, and then we have to, it's a little bit longer road. We have to create a score. We have to look to see if they're paying rent, utilities, cell phone, insurance, and we have to go and manufacture, which is legal, it's not illegal. We have to manufacture a credit score by building it with these alternative lines. It's a lot of work, I'll be honest with you. It's a lot of work for the loan officer and the staff, and for the individual too. It can take, on average, maybe 45 days to 2 months to manufacture that if they have zero score.
Okay.
And so
So
that's
what
what
I'm
it is.
hearing you say is that there are some options, and it sounds like if I want to buy, we did have a question about a 585 FICO score.
Okay.
I want to talk to you and see maybe there's some ways you can help me to improve that
Absolutely.
score. And then one thing I want to say about credit score, because I recently had a ding on my credit score. I paid a payment late, and they didn't inform me about it until it was 30 days later, and my
Mhm.
score dropped. I always have a really good score.
Yeah.
So for the gentleman or the lady who is
Uh-huh.
talking about a 585 score, I improved my score very quickly by doing a couple of things. First of all, I made my next payments on time. I made sure
Yep.
all my payments were on time. That's you have to do that.
Got to do
And
that.
then second of all, I reduced the amount of credit that I was using. So if I have two credit cards and I have $10,000 on each one, it's 20 grand that I can spend, and I'm spending more than half on each. Actually, I think it's like 30%. I don't know. We can talk about that later.
Oh
But
yeah. Oh,
I'm spending. I've got like 6,000 on this one and 7,000 on this one. I'm spending more than half of my credit.
yep.
That starts to alert the credit agencies, and they lower it down. They say you're starting to use credit, which means maybe we don't think you have the money. So the next thing I did after I paid all my payments on time was I actually reduced the amount of credit I was using. What that means is I paid my credit cards and I
Right on.
brought them down. I brought at least brought the balance down.
That's good.
What level would you say is good to bring the balance down on credit cards? 30%, below 30%?
Okay. Yeah. No, that's a good number. The in a perfect world, we would all keep our credit balances at less than 30.
Less than 30.
30, 20, 10. 10 is the best number. But anything less than 30 is always awesome. And that'll give you the highest probability of having a higher score. No
Yeah.
doubt about it.
Yeah.
Well, I
So
can
base
spend an hour on credit.
yeah.
We'll have to do a one on credit, Chris. That would be great.
Yeah,
Yeah,
absolutely.
we can do one on
That's
credit. We can spend an hour on credit because there's so many different facets of credit that
yeah.
affect your score that we can spend 15, 20 minutes on each one. But
Yeah.
we'll save that for another day.
So for anyone who's having credit issues, it's important to talk to an expert and make a plan.
Yeah,
Not if you're not making a plan, you're kind of planning to fail. You're just going to be trying haphazardly. So talk to
that's
an
right.
expert about your credit. You can improve your credit quickly. It doesn't take a long
That's
time.
true.
But if you don't know what you're doing, you could be kind of spinning your wheels a little bit.
That's true. That's very true. You can change your score within 90 days. That's the
Right?
fastest. I'm not going to sit here and tell you you'll do it in 30 days. No, it doesn't happen in 30 days, but it can happen very easily in 90 days.
Yeah.
The tougher cases will take longer. They'll
Yeah.
take longer. They'll take 6 months. They'll take up to a year. The ones
Great.
that are really tough. But I'll work with you. I'll walk you through. I'll help you. I'll show you. I'll guide you and take you to the place you need to be able to buy that home when the time is right. So cool. I moved on. I bumped over here. I'm trying to get through the presentation as quick as possible. How much how much house can I afford? This is always a big question when a realtor, someone or a broker refers me a client. They said, how much can I afford? They don't know because it's okay. You're not supposed to know necessarily, but what you do know is you do know what you're comfortable paying, because we all have a standard of living that we're accustomed to. And so we have to pay attention to that carefully, because you can get yourself in a big pickle if you go over the ratio. So I'm going to give you a very generic number. So during the recession, we had some major changes in 2008 that through, we had changes all the way until 2014. One of the things that came into effect was something called a QM loan, a qualified mortgage. Qualified mortgage basically said, we're not going to let you buy more house than you can afford. We're going to protect you. And I'm using a very conservative, a little bit of flexible. You could make an argument that 45% ratio, that banks look for 45% ratio of your gross income. You can make an argument that it should be 43. So there's a little bit of very small variance. But let's take an average household. An average household, very common, mom makes 50 grand a year, dad makes 50 grand a year. You're looking at a combined income of $100,000. When you break that out over monthly basis, that's about 8,300, 8,333. If you take 45% of that number, 8,333, 8,033, you take multiply 45%, you're going to come up with 3,750. Now that 3,750 must include your car payment, school loans, housing payment, credit cards, no utilities, by the way. No, I owe my mom, $100 a month, and you have to include it in there. No, not at all. It's the things that report on your credit report. So we look at that, and when that number fits into that formula, then banks they're more likely to lend the money to you. Now, does that mean I haven't seen higher ratios lately in the last 3 years? Yes, I've seen ratios as much as 50%. I have even seen one for a veteran, it was 56%. But there's other mitigating factors that play into it and that allow for that to happen. But cookie cutter, simple, generic rule of thumb is 45% of your income can be used to pay for a home and pay any debts.
Okay, so let me make sure I got this right.
Go for it.
That I take my monthly household income, everybody who's together, and I take 45% of that, and I take that number. That has to be my rent, my credit card payments, my utilities.
That's right.
Is that right?
No utilities. No
Not
utilities.
utilities. Okay, so my rent, my credit cards, my car payment.
Yes.
Okay, and any other loans that are
Right.
with an entity, with a business.
Yes.
Okay,
That's right.
that are going to be reported. So when you're looking at that number, guys, if you're paying, say, $2,000 rent and you got $350 for your car and you owe some student debt or your credit cards, if it all fits in there, you can still qualify and get a loan.
Absolutely. Now you could see, just to create a quick distinction, if you had no debt, like no car payments, no credit cards, nothing, you could push this number to as high as 42%. That means all of it could go towards a house payment,
Mm-hmm.
because there's not $1,000 there that's going to pay other debts.
Got it.
So again, case by case, we can
Yep.
get together. That's what the lending part of it is. That's my job. I'm step one. I'm really step one in the process. People think they have to go look for a house first. That's not the case. We have to talk. You wouldn't go to buy the groceries without your wallet.
That's right.
You have your wallet with you to know exactly how much you're not going to get in that line and not have your wallet with you. That's what I do. On average, I fill your wallet up with $500,000 or more to go out and buy a house. It's
Sounds
amazing.
great.
Yeah, but then this is what I've been doing lately, the last 3 years. Now I help you get out of debt quicker. I put you in debt, but I help you get out of debt quicker as well. We've got a lot of strategies that we've been doing lately, last 3 years. So planning. This is an interesting one. Chris, you want to jump on this one? You want to take this one?
Yeah, so I work with a lot of first-time home buyers, a lot of people who don't know where they're starting. If that's you and we're talking to you, I don't even know where to start, Chris. I just want to buy a condo. I want to stop paying rent. I just want to buy a place. Okay. Your first step is always to talk to a mortgage lender. You're like, well, but I haven't found a place I want to buy. If you found a place that you love, it's already too late because right now we have to be making an offer. The seller wants to know that you have the financing in place. Like Sergio just said, you have that half a million dollars
Yeah.
loan ready to go today, not in even in a few days. So talk to your mortgage lender. Sergio is going to give his phone number, and feel free to look us up online. You want to take a look at your credit score. Actually, banks right now, Capital One does a free, absolutely 100% free credit score. You can get an app on your phone, and there's also freecreditscore.com, which is that what it's called? Free credit score
Yep.
dot
Yep. Oh, there's a lot of
com.
them. Yeah.
Yeah, lots of them out there. Take a look at your credit score. And as we said earlier, make a plan to improve your score if you need to improve your score. There's lots of resources online, but sometimes talking to somebody is the best. Third point, don't make big purchases. We all want a new car, and it's very tempting to say, well, it's only 250 bucks a month, oh, they're going to do a special, it's 199. Okay, that still is going to have an effect on your credit and what you can afford to buy for a home. Would you rather have a new car or would you rather have a new home? That's a good question to ask. Next one, pay down your credit cards. Like we said, Sergio said 30% is the max. So when you have a $10,000 limit, don't use more than $3,000. Go to your credit cards right now, check them out, take a look at what is my credit limit. It might be 4,000, it might be 6 or 10. Make sure you're using less than 30% of that. Really, ideally, guys, we should be basically paying off our credit cards every month, but sometimes we can't do that. And then the last thing is stay in your industry. So people always ask when you're changing jobs, hey, I've got a new job. Instead of working for Qualcomm, I'm going to be working for Initech. Okay, the question is, are you going to be doing the same kind of work? I was an engineer at Qualcomm. Now I'm going to be an engineer at Initech. Great, no problem. That's kind of a lateral change. You're changing from one. All you're doing is walking into a different employer. And when you're making a job change, your employer can show proof of that, or we can take a couple of pay stubs and prove that you've got that income. So if you're sitting right now in October 30th of 2020, and you've got good income and you've got a job, maybe you need to work on your credit or pay off a car loan. You can make a plan now to be able to improve your credit and get all of these things ready.
That's right. Yep. You can never start too soon. Bottom line.
Yep.
You can never start planning too soon to buy the biggest investment most people make in their lifetime. The average person that has a job and a career, usually that's the biggest expense that they undertake in their entire life. So yes, you can never start too soon. Chris, I think we're done. I think we finished. We have one question here. Can you receive $10,000 cash? My brother wants to give me $10,000 cash. Man, the answer is no. We cannot receive cash when we're trying to buy a home for the first time. We have plenty of programs, though, that'll give you the money. Would you believe we have a program that'll give you as high as it's like $795, almost $800,000 with zero down. Isn't that amazing?
Wow.
800,000 with zero down. That is amazing. And that's a real number. It's not, down payment assistance is not for low income. You can be a strong 6-figure earner, meaning over 150, and you can actually qualify for a down payment assistance up to $795,000 this year.
Down payment assistance, is that free money or is that a loan?
Great question. That it's some of it, and this is where it gets you have a lot of roads here. Some are grants, some are loans. To put it simple, some are free, some you have to live in the property for 5 years in order for it to turn into a free loan, a free grant. And some are loans. Like the previous example that I had in the deck card here, that was a loan. They received $27,000 for closing costs and for down payment. So it's both. And we have to figure out which one it is, which one we're going to use based on the qualifications and income guidelines. And we have to go through each one of them to make sure that you're getting the right one.
So let me ask a different question. If my brother wants to give me $10,000 directly to me, and I use it as a down payment, can we do that?
Yes, yes,
I
yes.
use
It just
I
can't be in
use it as a
cash.
down payment. Yeah, I think what the question might have been is, can a family member help you with down payment?
The answer is yes.
Yeah,
They
and
sure
that's
can.
actually very, very, very common.
It's very common.
What are the rules around that? Just give me the 20 seconds on.
Oh, 27. Okay, well, let's see. Let's number one, oh, they do have what's called a familial line a connection. So you cannot have your best friend from college give you the money. It doesn't work that way. The lending institutions do not like when you have a non-family member giving you money. So they're looking for a connection.
Mhm.
First degree, mom, dad, brother, sister, uh, or mother-in-law, father-in-law. That's by marriage is acceptable as well. But you can't have your best friend from high school gift you $100,000.
Got
It's
it.
it's now it's not impossible because I did it one time and I had to prove that they knew each other for 25 years. And I was able to string it all together, show the old pictures, get the letters, show everything that they were friends and they were best friends for 25 years. And we pulled it off. But
You're amazing, man. Yeah,
it,
you
it was
honestly do some amazing stuff.
that was a hard one because we had to prove everything and they were willing to go through it. And I said, I'll go through it with you and we'll do it.
Yeah, yeah.
Anyway,
So we've had a few questions come through, but some of these are very specific,
okay.
and I really want to encourage, if you're on the chat and you have a specific question like car repossession, some other things, please put your phone number in there so we can call you. And we won't bother you, but we'll just call you and answer your questions. One was about car repo. Another one was about modular homes. These are very specific
Oh, yeah.
questions. So we'd
Great.
like to be able to answer those, but it depends on what your specific, sorry,
Yeah.
what your specific situation is.
Okay.
Um,
Okay. No, yeah,
so,
absolutely.
so
Those are individual questions.
yeah, any of your participants here, if you guys, Marcella is on the chat, send her your phone number and your name, and we'll get in touch with you directly. And Sergio might be able to work his magic for you and be able to help you get a loan.
Yes. Yes. I'm the guy that gets you in debt, but also I want to get you out of debt quickly too. No more than 20 years. You should pay off that house in 20 years. It'll change your life forever. Hey, the bottom line. What's the bottom line? People always say, give me the bottom line. I want the bottom line. Does it
Yeah,
make sense for you? That's ultimately what it is. Does this make sense to you? It just depends on your dynamics, your family dynamics, how long you're planning on being in the area. If you're leaving in 2 years, I would say don't buy a house. Don't buy
yeah,
a house. I'll be the first to tell you. If you're going to be transferred out in 2 years, don't even bother. If you're going to be here long term, you're going to be here long term, then it probably makes sense.
yes.
So go ahead,
Yeah,
Chris.
and I would say, yeah, you need to know what your monthly budget looks like
Yeah,
and what you're paying for rent compared to what your mortgage is going to be. Does it make sense for you? But if you can get into a property and you can start building that equity, plus you have home ownership, you have, a place that's yours, then go for it. Again, it has to make sense, and each individual is going to be a little bit different.
that's right.
One thing I do want to say is that if you are thinking about buying tomorrow or you're thinking about buying in 5 years, Sergio and I are here to help you and we want to make the process easy. So we want to, grab some information from you, talk on the phone, and just get whatever we need, and we can do the work for you. We'll scurry off and we'll do our work, and we'll come back and try to help you out any way we can. But this isn't a short-term offer. By the way, we do have some special offers that we have if you choose to work with myself as the realtor to find you a home and get you through the contract, and if you choose to work with Sergio. Sergio, what's one of the benefits that you're offering?
Well, the one that's there's no better way than to tell you a quick story. So you had referred me to a very nice couple, and they had gotten a quote from a very big lender. You see them online all the time. They're online all the time. Big lender. They came to me. I said, "Hey, let me give you a quote. I think the way our model is priced, I'm going to show you something." Basically, I was giving them $6,000 as credit. I said, "But let me show you this other option." I said, "We can take that $6,000 that you were going to use to pay your closing costs. What if we used it to buy down the rate?" Well, wouldn't you know, that rate went down a full half a point. When you're buying for almost 800,000 and you drop your rate by half a point, that's a big savings. It was like 300, close to $400. So the bottom line on that is, because of the way we're priced, and you won't see it until you see it when you sit down, you can take either the cash up front to help pay for your closing costs, or you can use that to drop your rate. Either way, you win. You win.
Yeah.
And we'll leave it at that for now. We'll get together, when you're ready, and we'll talk it through. I'll show you all the numbers.
Yeah, so thank you so much for joining us. And if you're watching this online and you're on Facebook or YouTube or IGTV, we should have a link connected here. But my name is Chris. You can call me or DM me on whatever platform you're on. My phone number is 619-757-7865. And we do have some other offers that we're willing to do here to kind of be able to help you buy a home. So if you're trying to get some good deals going, we would welcome the opportunity to help you out. As far as these kind of the remaining slides here,
Ooh, I still got a lot of slides here, Chris. Woo.
Yeah, I thought you said we were done.
I thought we were done, man. Look at this. We're still rolling. Anyone still here? It's already been an hour. We want to be respectful of people's time.
Yeah.
But,
well, what we can do is we're able to help you walk through all of these processes. So here's the process for a loan, for instance. You can see there's a lot of different steps. This just really just goes to show you why you need an expert working on your behalf and actually doing the work for you. So yeah. So again, if you're online, just contact us, DM us directly, and look for Mr. Sergio online or myself. And we hope to hear from you soon.
Awesome, Chris. Thank you. I will close out our meeting, correct?
Yeah. Thanks for joining me, Sergio. And thank you, everybody, for being with us today. And we'll talk to you soon.